What's going on, guys? Welcome back to the channel. I hope you are enjoying your Saturdays out there, but we need to talk about AMC stock and where the data currently sits with this trade. If you guys seen the last video, then you know I think this upcoming week is going to be a good one for AMC, specifically the first half of the week, and we'll talk about kind of why that is and go over all of the data you guys need to know. The cost to borrow rate being at 49.5% is getting pretty high, and that is something we also do need to talk about a little bit more in depth here in this video. So without any further ado, hit that like button and subscribe to the channel if you guys want to get yourself free stock. You might as well as free money. Links for Webull, Moomoo, and Public down below in the description of this video. So on Friday, we've seen a very explosive rally in the markets. AMC stock also got some of that rally, but it was really at the end of the day where we seen most of that rally actually come into play. AMC was actually falling for a vast majority of the day, hitting $11.93 per share, and then rallying towards the end of the day, almost hitting $13 per share. Around $12.50 we peaked out, and then in after hours we pretty much held that gain and just stayed flat. It says down about 10 cents here in after hours, but nonetheless pretty strong day overall, up about 3.5% for Friday. And even the markets into the close did start to really gas in a big way, and Friday was all down to the bank stress test that caused that first initial gap up, and then the Michigan Consumer Sentiment Survey showing that participants think inflation will be around 5.3% here in the near term future, is a lot better than where inflation currently sits at 8.6%. Now, a lot of commodities over the past month have really started to turn over. Wood, copper, lumber, which is wood, and a lot of other grains. Even the price of oil has really started to turn over in the last month, so that should lead inflation to come down, and that is one reason why market participants are bullish. At the same time, the bond yields are coming down. A lot of investors are starting to fear a recession, so they are starting to buy the bonds in the short term. That is good for equity markets, and by short term I mean probably a couple of week time period until we get down to an actual recession, which could be declared as early as July 28th. So all of these things are bullish here for the next couple of weeks, and the markets are really going to focus around data. We don't have earnings for the next couple of weeks. We have a couple companies that start to report here and there. We do have Nike on Monday that does report earnings, and that is going to be the first company that could potentially be important to the markets because of the supply chain, the cost of product, and potentially to see how the consumer is doing. So that's going to be important for a lot of those different reasons, and that could certainly move the markets. But overall, next week we don't have that much data besides Nike earnings. On Thursday you do have the personal income month over month, personal spending month over month, PCE price index month over month and year over year, as well as initial jobless claims, all of that coming out at 7:30 in the morning on Thursday. And then on Friday you do have the ISM manufacturing data that comes out, but nothing too crazy. At least before that, Thursday and Friday, those are going to be the big days. Monday you have durable goods orders month over month. It may be important, it might not be. If it's not, then you're pretty much going to have, I think, a continued rally for Monday, Tuesday, and Wednesday at the very least. And even as JP Morgan's Marko Kolanovic sees a 7% rally this next week for the overall stock market, and that is because you do have Q2, which is ending, and you are going to get portfolio rebalancing. And long story short, a lot of stocks are way oversold. So when hedge funds start to look at their portfolios, they're going to say, why are we short this stock, or why are we not buying this stock? Probably time to do a little bit of buying in AMC. If I were to say so myself, maybe a little bit of that shorts covering kind of rally, or maybe even just some hedge funds getting out of their put positions, which could free up a lot of market makers shorts, and they could go out and buy the stock essentially because people are getting out of those put positions. So that in a nutshell is what I expect for next week. I do think it's going to be bullish. Now let's take a look at the data behind AMC stock. So if we click on AMC over here on Ortex, go to the shorts, we could see the short interest of free float is sitting at 22.51%, free float out on loan 37.15%, days to cover at 3.73, and 100% share utilization. The dollar amount that is sold short is worth about $1.4 billion, so that's a lot of sweet tendies that could make its way into our portfolios. Now, the most exciting thing in my personal opinion is the cost to borrow max, which is 49.41%. That is getting very high, and cost to borrows do not just go to 50% or close to 50% for no reason. There's an obvious reason why this is happening, and there is a lack of availability to get your hands on AMC shares, and people lending out their shares, if they expect the stock's going to go up 30, 40, 50%, wouldn't you want that as a cost to borrow rate, right? So it's kind of implying a bigger than not potential move that is to come. Cost to borrow average at 24.81%. That is still very, very high. And cost to borrow minimum at 3.14%. The cost to borrow minimum is the one that fluctuates around a lot, but that was just at over 19% as of recently. So if we do take a look at what we've seen as far as yesterday, 7,000 shares available, 6,000 shares available, 300 shares available, 0, 6,000, 0, 200, 300, 0. There's not that many shares available. And as you guys can see from this cost to borrow rate right here, yesterday in the beginning of the day, the cost to borrow rate was about 18.52%, and then the cost to borrow rates did start to spike towards the end of the day, and you were sitting at almost 20% at 19.74%. Now I will say that is a lot to pay to lend out shares. That means you essentially have to see a 20% drop, or you are going to lose, factoring in that interest that you are obviously paying as you take out shares on loan. So it puts a lot of pressure on these short sellers and even anyone that has shares out on loan, which is 191.48 million shares, especially coming into a rebalancing week where you end Q2 and AMC on a risk to reward profile is just not worth shorting. Let's just be honest there. It's in the one segment of the economy that people are actually spending money in that is up year over year, which is services, right? Which is your travel, going to do things. People want to go do things. And to bet on that industry right now over even the next couple of years, I think is very much a bad idea. And I think hedge funds will come to that realization here probably in this next upcoming week as portfolio rebalancing does start. Now, something that is really holding us down is the put options, and you guys can see some of these very large put options, like $2.51 million worth of a $20 July 15th put that, you know, is causing a lot of market makers to go out and short stock in a very substantial way, and not to mention all the other put options that are coming through. And this is just the unusual options flow. This is not even considering the just normal puts that hedge funds are buying, maybe a couple $1,000s here or there, 10,000, 20,000. This is really like 30,000 and above, and they are interesting options. So you did see one July 15th $14 call for about $67,000, and a July 22nd $15 call for about $36,000. Overall positive order value on Friday was 2%. So that is really helping to keep us down. Even if there is not a lot of shares available to short, market makers can go out and short stock, essentially issue these IOUs, because they have to do that to make sure that there is an options market, and that's what is going on in my personal opinion. I do think we own a majority of the float, and that's why the cost to borrow rates are going up so much at 49.5% for the cost to borrow max. It has been a long time since the cost to borrow max has been that high. Now, if we do take a look at the Stocko tracker data, you could see for July 15th, looking at about 12,500 calls that are in the money, 430,000 calls that are out of the money, 90,000 puts that are in the money, and about 87,000 puts that are out of the money. So I've said this once, and I'll say it again. If even half of these calls go into money, or half of these puts go out of the money, that's going to be over 25 million shares that have to be bought by the market makers, and that is going to be insanely bullish for AMC stock, considering where the volume is at. It has just been very low. In between 25 and 35 million shares on a daily basis is not uncommon, and that's really just where we sit. On Friday, higher volume day. A lot of that was because of the move you've seen in the last 20 minutes of trading, and you did have about almost 81 million for volume, but besides that, you're really in between 25 and 35 million shares that trade hands. So I think once we start to get volume that really comes into AMC stock in a big way, which I do think will be in this upcoming week, if we can break out above the 50-day moving average, we're probably heading straight to the 100-day moving average up there at $16.04 per share. And then the 50-day moving average at $13.70 per share. That's going to be the first key level you have to break out above, and then if we can, it's probably going to propel us to these moving averages that are much higher. It wouldn't surprise me to see something along the same lines that happened during Q1 rebalancing, where Q1 rebalancing came into effect. The stock rallied about 170% from about $14.50 per share all the way up to $34.33 per share. And what happened? You broke out above the 50-day moving average. You got some momentum, right? You came up to the psychological resistance level at $20 per share, stayed in that range for about 3 days, and then seen a big breakout day above the 100-day moving average, and then you chilled out just under $30 per share to close out that day. And then the next day, you've seen a huge rally off the start of the day, came up, went above the 200-day moving average, and then got shorted into the ground. And then it's been shorting ever since. And now recently, we've just been plateaued, just like this is straight just diagonal. Like there is nothing happening here. You're not going down, you're not going up, which is a good thing considering what has happened with the markets. But I do think this Q2 rebalancing is going to be a very bullish thing, and we could expect to see something along the same lines. I don't think would be a crazy expectation at this point. Now the RSI is at 47.94, so under that neutral level of 50, so still on the oversold side, and the MACD is still bullish, which is pretty surprising. We've been pretty flat, and it has not went bearish as of yet this whole entire time. So that is pretty much going to be all for this video. If you guys found value out of it, hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. Enjoy the rest of your weekend, and I will see you in the next one.